Hello everyone, welcome to the video of the day. So the most powerful man in finance just had it first day. Here's what Kevin Walsh told markets. So at 2 p.m. Eastern, the most powerful man in global finance stepped up to the microphone for very first time. Kevin Walsh, new chair of the Federal Reserve, first press conference, first policy decision. Every word he said will move markets for next 6 months. So here's exactly what happened and what it means for your money. So let us talk about first of all who is Kevin Walsh. So Mr. Kevin Walsh was sworn in as the 17th chair of the Federal Reserve on May 22nd of 2026. He replaced Jerome Powell, the man who navigated the pandemic, the inflation crisis, and the most aggressive rate hike cycles in last 40 years. So Walsh is different from Powell in very critical way. He's known as Walk, a believer in what markets call sound money. The idea that Federal should be aggressive against inflation even if it means pain in the short term. When Trump nominated him, US stocks slide immediately. Treasury yield rose, the dollar strengthened, Wall Street was nervous. Why? Because Walsh was openly critical of the Federal's slow response to post-pandemic inflation. He watched Powell call inflation transitory and he'd be forced into a 500 basis point tightening cycle that nearly broke the economy. Walsh said that he will not make that mistake. Today was his first chance to prove it. So what happened? The decision itself, the rates held unchanged at 3.5% to 3.75%. No cut, no hike, exactly as markets expected. But here's the thing about Fed meetings, decision is almost never the story. The press conference is the story. Every word will matter. There are three signals came out of today's meeting that markets are now pricing in. Number one signal, the bias shift. The Fed officially moved from an easing bias to neutral stance. Transition rate cuts are off the table for the rest of 2026. The December 2025 cut was the last one. We are on hold indefinitely. Signal 2. Rate hike are back on the table. At least three FOMC voting members projected rate hikes before the year end. The balance of risk has shifted towards inflation being the biggest concern. Signal 3, the third signal. Watch inflation obsession. PC inflation, the Fed's preferred gauge, rose 3.8% year on year in April. This is nearly double of the 2% target. Today he made clear that he will not tolerate this. He will act if needed. So the dot plot which we connect is the chart showing where Fed officials expects rate to go could show the Fed on hold for all of 2026 with hikes the real possibility 2027 if inflation doesn't fall. Why would it change everything? So here's is why the press conference matters to every single asset class. So for the past 2 years, markets have been railing on one assumption: the Fed will cut the rates. Lower rates mean cheaper borrowing, higher valuations, more risk appetite. Every AI stock, every crypto rally, every real estate boom has been partly built on this assumption. So today, Wash killed it, not with the hike, but with something arguably more powerful: certainty. We now never know the cuts are not coming and hikes are possible. That change the calculus on every leverage position in the market. Connect this with yesterday's video. The Bank of Japan raised rates to 31-year high. ECB hike last week and now the Fed signals it may follow. The Federal Reserve is more likely to keep rates steady for the remainder of 2026. So three of the world's most important central banks tightening simultaneously. This is the definition of a global liquidity squeeze. So when global liquidity tightens, risk assets suffer. The AI stocks sitting in stretch valuations, Bitcoin near all-time high, emerging market currencies, all of them are priced for cheap money. This is not a longer guarantee. Diversification has to be taken into the best antidote to volatility so far in 2026, and that will continue as investors' positions for uncertainty. One more thing which we need to talk. This could also be Wash's last press conference. He has been openly critical of the practice of post-meeting press conference and may end them entirely. If it does, the Fed becomes less transparent overnight, and markets hate uncertainty more than bad news. So, what to be watched next? Three things to be watched from here. Not a financial advice, always do your own research. The first will be the dot plot. Read between the lines. If three or more members are projecting hikes, this is a real signal. Not what Walsh says at the microphone, what the 12 voting members are writing down privately. Second point, PCE data in July. This is Walsh trigger. If PCE stays above 3.5, he hikes. If it falls 3%, he vaults. Third, the Walsh communication shift. If Ian's press conference volatility increase, Markets can no longer read the Fed in real time. Any surprise becomes a shock. This is new risk factor that didn't exist under Powell. So to conclude, yesterday Japan, today America. In upcoming weeks there will be something else. Two of the world's most powerful central banks just told you the same thing. Cheap money is over. Act accordingly. Wash first press conference set the tone for the next 2 years of monetary policy. Inflation is the enemy. Cuts are gone. Hikes are possible. If yesterday's Bank of Japan video connected the dots on global rates, today's federal video is the second half of that story. Watch both back to back. Make sure to like the video, share it with your friends, family, and colleagues. Subscribe. See you then. Welcome to Money Brief. Let's grow together.